If you're an SCHD holder, I'm willing to bet you that this video that you're about to watch is going to be one of the most valuable ones that you've clicked on all year. Let's go. Yo, what's going on, Premium Chasers? I hope you are having an absolutely God-blessed day. If you like this sort of content, make sure to hit that like and follow button down below. Guys, today is going out to all the SCHD holders. You guys got a place in my heart. I got started investing with the dreams of being able to invest enough money in these dividend-paying ETFs and dividend-paying stocks that I could essentially live off of them. And you're going to see in today's video why that is a pipe dream for a lot of people and how you can reach your own financial goals, whatever those are for you, a lot faster with the strategies that I'm going to share with you. And today we're specifically talking about SCHD because I believe it is one of the best ETFs to do this strategy on. So first and foremost, let's kind of get all on the same page. If you don't even know what SCHD is, basically it tracks the top 100 dividend-paying stocks, and you get about a 3.8, about a 3.79, I think. Let's just call 3.8% return on your money. So if you have $10,000 in SCHD, you collect about $380 of dividends a year, right? And a lot of people put a lot of money in this. Now, the cool thing about SCHD is it doesn't really do much. Like, to be honest, this isn't like a growth stock. Again, these are boring dividend-paying stocks that the play is to make income, right? And I'm an income investor through and through. I mean, I got my buy and hold stuff, but I am a big income investor. I want that money coming in that I can reinvest and compound that growth. And a lot of people that invest in SCHD, and you can see just over the last year or the last 5 years, it's only up 30%. Now, is that a lot? Yes, of course. But especially, I'm going to just bear with me here 5 minutes. I promise to be to the point here for yourself. So let me show you how you can essentially manufacture an additional dividend on your SCHD. Because to me, if I've got $10,000 locked up, I'm looking for a little bit more than $380 a year. I'm going to be honest with you. I don't think that a 4% even a year on your money is worth it, considering you could go put your money in a high yield savings account. But the cool thing about SCHD, because it kind of really just moves sideways, like even if we look at the past year, it's kind of just not really doing much here for us, right? This sets up perfectly for what I'm about to share with you. So what we're going to do is go into the options section. Now, I know you've heard of options before and you want to run for the hills. Bear with me. Listen. This is a logical guy you've clicked on a video of, all right? I'm not an options buyer. I'm not a degenerate. I believe patience and discipline wins, just like any other aspect of your life, not just investing. Patience and discipline in health, patience and discipline with your family, patience and discipline with your health, right? All of those things are so important, and I think those translate beautifully not just into business, but into investing as well. So I am paid to be patient. That's what I love this strategy. So what I'm doing is I'm clicking sell a put. Now right here, I'm going to go 35 days away. Now all I'm saying here is I'm willing to buy 100 shares of SCHD on December 26th. So it's just about 33 days away. Okay, that's all I'm saying. Now I get to actually name my price. Now a lot of people, what they do is they will just go out there, and this is exactly what I did as a dividend investor for many. I'm still a dividend investor. I still consider myself a dividend investor because I primarily invest in dividend-paying stocks, but I'm layering this strategy on top of it to spice up my gains a lot more, right? So what I'm saying here is, you know what, for this example, we'll say 27. Let's say you actually want to buy 100 shares of SCHD at $27, right? Just under the current market value. Well, if I say I'm willing to do that on December 26th, I would collect $40 of premium. Now that's the bid. We'd probably get around $45 of premium on this, but for the sake of this educational example, we'll just say we're going to collect $40. This is credit. This is actual premium and money that is going to hit your account when you execute this trade, okay? Now, let's kind of like all go full circle here because you're probably getting excited and you like what you're hearing, but let's just map this all out and talk about the risks because listen, everything takes risks. Nothing is free in the stock market. We all know that, right? So I like to put everything into my calculators. All my calculators are free. Just just join the Ark Options Strategy workshop. It's a free 2-hour training, which takes all this stuff to the next level. And then I give you all my trade logs, calculators, all that stuff for free. But with that said, I'm locking up collateral here. I'm locking up $2,700 of my dollars, right? Why am I locking up $2,700? Well, one contract is equal to 100 shares. I'm saying I'm willing to buy 100 shares of SCHD, right? That's what I'm saying. I'm willing to buy 100 shares of SCHD, right? On the 26th. Now, if on the 26th at close, SCHD is trading above 27. Let's say it's trading at 27.50 or 28.29, right? Guess what? I'm not buying my shares. Awesome. My $2,700 is given back to me, and then I run the play again on another opportunity, right? But the second thing that can happen, and this is the big risk of this strategy here, is that if SCHD drops below 27, right, I'm on the hook to buy it at $27, which I'm okay with because I wanted to buy it anyway, and I get that premium upfront anyway. Now, here's where the real magic happens. I'm getting about a 1.48% return on my money in a single month time frame, right? A 33-day period right here, right? That's $40 divided by the $2,700 that I am locking up. That's a hell of a nice little, quote unquote dividend. It's not really a dividend. It's obviously a premium coming from options buyers, the degenerates. But with that said, I can do this month after month. And eventually, though, we get assigned. What does that mean to get assigned? That means that eventually you're going to have to buy your shares. And that's where the magic really happens, okay? So the cool part about this, and I'm just going to hit on this briefly. If you want more info on what I'm about to say to you, go to the Ark Options Workshop. But the cool part about this is I'm making 4% on my money while I wait to buy SCHD. So this $2,700 or however many contracts I do, I'm earning interest, about 4% interest on my money as well. So not only am I collecting a premium while I wait to buy stocks that at a price that I choose, I'm also collecting interest on my money while it's locked up. Awesome, right? Awesome, awesome, awesome. Like I've over-engineered this crap to infinity and beyond for myself. But with that said, let's say you own 100 shares of SCHD. A lot of you are going to really like this, what you're about to hear, because I'm assuming if you click this video, you're a holder of SCHD and you probably buy it regularly. Well, what don't you want to get paid to maybe buy it? Listen, if you go and make me buy your shares, you're going to pay me to maybe buy it, right? Literally, and this isn't like something I made up, guys. The way I got introduced to all this was when I read an article from Warren Buffett that he collected $7.5 million waiting to buy Coke, and he never even ended up buying Coke, and he just walked away with almost $10 million of premium. I follow Warren Buffett. I don't follow these other degenerates. I don't know about you. But so what we're going to do is if you have at least 100 shares of SCHD, and you probably do if you click this video, is what we can actually do is sell calls against your shares. Okay. Now, what does that mean? Well, all I'm going to flip from is sell put to sell a call, and I'm going to leave that same expiration date. Now, let's just say for this example, you own 100 shares of SCHD around $27, right? Like whatever. You went out there, you bought 100 shares of SCHD, and we could do that. We could spend $2,700 right now and buy 100 shares outright of SCHD at the current market value and spend our $2,700, right? Well, what we then can do is sell a call against those 100 shares. One contract is 100 shares. That's just the rules, guys. Now, you could do 200, 300, 400, 500 shares, right? If you have that many shares, great. Obviously, you make more when you have more money. That's the reality. Please don't let anybody convince you that that's not true. It does take money to make money. That's the way the world works, okay? With that said, though, if you own 100 shares of SoFi or of SCHD, that's so fun in the brain. So if you own 100 shares of SCHD, right, what we can do is go out about a month and say we're willing to sell our 100 shares for a certain price, okay? So let's just say here, right, in this specific case, we're saying, hey, we'll sell it for $27.50. Now, our bid-ask spread, again, we'll just say $15 we're collecting on that. So let's go to my covered call calculator. Again, free at the Ark Options Workshop. Click the link down below. I'm collecting $15 of premium, a lot less, right, than the waiting to buy it, for sure, but money's money. I don't know about you. So our strike of the option is what we're willing to sell it for. So we're willing to sell for $27.50, right? Fantastic. Our purchase strike price, we just said, is 27. I actually had that already there, 27. So I get a premium return here of a little over 0.5% in a month, okay? Now, that's not terrible, in my opinion, if you're running this on SCHD. It really isn't, because now you're going to be collecting that dividend. You're collecting a dividend from SCHD as you normally would, but you're also, quote unquote, renting out your shares on a monthly basis of SCHD and collecting some additional premiums. Now, obviously, as volatility spikes, all these numbers drastically get higher. That's the name of the game in the markets. When the fear is high, that's when the premiums on both ends are usually the best, especially on the put side. As you saw, they're tremendously better. So what are the risks of selling the call now? Well, for example, let's say at close on the 26th, right, SCHD is trading below 27.50. It's just trading at 27 still. Well, if that happens, we don't sell our shares. We simply open up our phone again in a month because, again, I'm not a day trader. The last thing I'd ever want to be in my life is a day trader. I open up my phone in 33 days. Okay, I didn't sell my SCHD. Okay, perfect. Let me open up another contract, collect another rent check, and check in on it another month. A lot of our members do that here. That's a lot of busy people. That's what they do. They just let everything go to that expiration date and they see what happens, right? The second thing that can happen, though, is let's say that on the 26th at close, right, SCHD is trading at 28, 29, 30. You are selling your shares at 27.50. This is the big risk is you miss out on all those additional gains. That's just the way it is, guys, right? You will miss out on those gains, but we get an additional profit and appreciation on those gains, which is pretty decent. But most of the time, right, because when we are doing this on SCHD, it doesn't move that drastically on us, right? It doesn't move that drastically on us. Okay. So we're able, and if it does, fantastic. We lock in the gains, right? And guess what? When we get that money back, right now we have $27.50 plus the other $50 if we only did one contract. So now we're at $2,800. And guess what we do with that $2,800? We come back to SCHD, we click sell a put, we go with 30 days out if we want to. Now you can go shorter time frames if you want. You do get more gains at that way. You do. It just requires a little bit more management, a little bit more advanced. You could do these weeklies. I like to do weeklies as well. Actually a lot more lately than I normally have just because I put a little bit more time and effort into this, but there's nothing wrong if you're like a busy person doing your monthlies, but you could do weeklies as well and collect that premium even faster. If you want to learn more about this, guys, watch the Ark Options Strategy workshop. That is the first link down below in the description of today's video. Just for attending, I'm going to give you 3 of my calculators, my full trade log that's updated regularly, so you'll see those updates coming in live. You can see the positions that I'm in right now here on our public portfolio, as well as my 2 calculators here. Click that first link in the description of today's video, guys. Remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.